Howdy, who all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, the stock market's back open after the long weekend. Hope everybody had a great weekend. What's the markets doing today? Well, the Dow is down about 100 and the Nasdaq's up about 100 and the S&P kind of hanging in there. Now, the S&P has broken through the 4,200. Well, the resistance zone, 4150 to 4200. We're sitting about 8 points above that resistance zone. Now, I do think we'll come back into that. A lot of people think this is the breakout and it's going to run higher, that we're in this new bull market created by, of course, artificial intelligence and the debt ceiling deal. Okay, so those two things combined, they think that the market will take off in the upward direction. I have the opposite view. I think we're going to pull back down. Now, that's just my opinion. You see, my opinion on this debt ceiling is probably not a popular one, but because we're raising this debt ceiling up like we are, I think it's, the White House, they tell us that we're going to skip over the recession. There's not going to be a recession. I tend to agree. We're going to skip the recession and go right into a depression. Now, that's just my take. Hopefully that doesn't happen. Hopefully we can, head straight up from here. Hopefully all of you are right that say we're going to get this new rally, that artificial intelligence is going to save everything, and maybe it will. That could be your take. My take's completely different from that. Now, I get some people that, they say that I'm just a gloom and doomer. I'm a fear monger. Apparently, I scared one of the people. Drummer 172, a shout out to you. I got to stop the fear mongering. I'm scaring the people. Look, if you don't like the channel, you can switch the channel. It's very easy to do. These modern day phones, they allow you to do that. You can change the channel. But for me, I just give you my take, what I believe. Now, I want to tell you there is some good news today. There's more good news in the housing market. The housing market, more good news, right? We've got a definite recovery going on. You know why? We've had two up months, right? Okay, the home price has increased 2 months in a row. So this definite recovery is now in play, right? This last month, they went up by 0.4%, not 1%, less than that, less than a half of 1%, but 0.4%. Now, to me, that's just a rounding error, and it's probably more that the dollar is devaluating as opposed to home prices going up. Now, we've gone down 7 straight months in a row, and now we've had 2 up months. Now, I tell you people all the time that nothing goes straight down. Guess what? Nothing goes straight up either. Okay, so like Nvidia stock, it looks like it's going straight up right now, right? Up around 420 today. It's that artificial intelligence stock. It looks like it's going straight up, but I guarantee you that too will have a pullback. Just like houses, we were going straight down, and now we got 2 months in a row, 1 and 1, right? 2. Anyways, we're gone up 2 months in a row in price increases. And this has created this definite recovery. Now, what they don't tell you is we're still down year over year about 4%, but they say a definite recovery is in play. So I guess that's actually is good news. You see, I'm not just a fear monger. I bring you the good news also. I don't want to scare the people. That's not my job to scare you. Look at what I say may or may not be accurate. Do your own research. It's usually just my opinion, and my opinion will be that the housing market's going to come down by another 40%. We're down about 10%. We're going to got another 40% to come down to where we hit the long-term moving average. Now, people tell me that's not possible. We can never come back to the moving average, Mike. We're way shot up past that. Times are different now. Everything's different. We can print the money. We can make everything go up. That is not my take. My take, we're going to come back down to that moving average. Now, here's what typically happens when we do come down to that moving average. We overshoot to the downside. Now, just like we have now, we've overshot to the high side, right? We're well above that moving average still. But it's not rare that we can come back down and retest that. Now, there's just a lot of smoke and mirrors that it's holding this marketplace up, right? A lot of smoke and mirrors going on. I mean, you don't see it out there. You see what they report, right? What they're reporting is home prices went up up by 0.4% last month. Everybody get in. Well, you see what they're not telling you is that 50% of sellers are giving concessions to the buyers. Now, how was it a year ago? Was it 50? No, it wasn't 50%. Was it 40? No, it wasn't 40%. Was it 30? No, it wasn't 30%. It's about 20% of buyers were given concessions a year ago. Sellers giving concessions to the buyers. Now, 50%, 1 out of 2, are making some concession. Maybe they give you a new roof. Maybe they remodel the kitchen. Maybe they leave $10,000 or $20,000 in escrow for you to remodel yourself, right? But they want to hold those prices up because they want to keep the price up because that's the comparable sale, especially these home builders. Now, these home builders, they do a lot of shenanigans, you know. I mean, new home builders, the home prices are already down about 15%. 15% from the highs of last June. They're down. Prices. That's prices. But they're doing pretty well on volume. They've overbuilt and they have a lot of volume to move. And the fact that nobody's selling their house is kind of a boom for the home builders. But why can't they get the price they got last June? Well, because the market's starting to soften and they got the smoke and mirrors thing going. They're holding the prices up with smoke and mirrors. What they're doing, they're buying down the rate, right? It's called the 3-2-1 buy down. Okay, so you can't qualify for their home. So what are they going to do? Well, they're going to lower the rate by 3% the first year. And you only have to qualify on that rate so you can get into the house. And then, of course, they tell you your income's going to go up. So the next year you only get a 2% reduction. And then the third year, a 1% reduction. Then you're paying full price, which could be around, well, actually it is around 8% right now. It's headed up toward that direction. And that's pretty much when the bank comes and takes the house back from you because you're not qualified to afford 8%. You're qualified to afford the 5% that they're putting you in there at. Now, they have this battle cry, right? It's a battle cry for us real estate brokers. I'm a real estate broker. And this is what they teach us to be the battle cry. Buy now, refi later. Just jump in now, and then you can refi later. See, right now, mortgages, 30-year fixed mortgages, over 7%, and that's if you have excellent credit. Now, if you have bad credit, you might be over 8% already. But buy now, refinance later, because everybody knows those rates are going to come back down to zero, and that way you have the house locked in, which is only going to go up from here. Listen to the people in the comments. They'll tell you, look at that drummer 172. He'll tell you prices are going to double. Look at Jacob, another shout out Jacob. He knows that prices are only going to double from here. He's a genius, that guy. You got to listen to him. He's in every comment. I love that guy. Anyways, I want to talk a little bit about Rocket Mortgage today. Rocket Mortgage. Okay, now this stock of Rocket Mortgage has gone from $30 down to about $7 or $8, somewhere in that range. So it's already dropped. So I wouldn't recommend shorting it, but if it was up at 30 still, I'd be all over that. But anyways, here's what they're doing. They're giving people loans with just a 1% down payment. 1% down payment. Now, they're not the only ones. There's a United wholesale lender that's doing the same thing, but they're just allowing you to come in with 1%. They have this new program, and I'm sure it's backed by you and me, all the taxpayer. The government's probably got this backed. I'm pretty sure because they have, it's kind of like an FHA deal where you can come in with 3% down, right? But how do they get down to 1%? Oh, they're going to pay the other 2%. Interesting. Once again, some smoke and mirrors going on here. I bet you that rate's a little higher than the normal rate because they got to recoup their 2% somehow, and they're going to recoup it over the life of the loan. That's their plan. Well, I don't think that people are going to be paying the loan for the life of the loan. And here's why I don't think they're going to be paying it. Well, it's because these people are low to moderate income level, right? They cannot make more than 80% of the median income level for the area. Now in San Francisco, that goes up to 120 grand. So, okay, let's say I'm making 120 grand in San Francisco. I come in, I got my 1% down, right? 1%, okay. And I want that $1 million house. I put my 10 grand down. Well, as soon as I close on that house, and if I had to get out, I would be way underwater. Well, who's going to take the hit? Well, Rocket Mortgage, but there's no PMI on this. No, PMI is insurance that we pay when we don't put 20% down on a loan. It's insurance to protect the lender, but they don't have any of that. And it's really not clear how they're doing this, but I get the feeling that the government once again is backing this program and guaranteeing them no losses, with the losses, of course, will be paid by you and me. I don't know that for a fact. It's not really clear. This loan just came out. It's called 1+. You can Google it if you want to put 1% down on a house, and if you make below the average income. Well, you see, and they tell you that this is only for people who can easily afford to make the home payment. Now, if you're making below the average income, you cannot easily afford to make the mortgage payment. Now, they say that they're giving these loans to people because these poor people, they're just not able to save enough money for the down payment. Now, if they can't save enough money for the down payment, how can they easily make the mortgage payment? I don't think they can. That's my take. You may have a different take, but I don't think they can. So there's no mortgage insurance. That's wiped out. They get to put 1% down. Doesn't say what rate they're going in at, but I think the rates are going to be inflated higher. You see, it's smoke and mirrors. We've learned nothing from the subprime crisis. If this isn't subprime giving a 1% down to someone that makes below average income, low to moderate income, I don't know what subprime is if that's not subprime. Look, we've learned nothing. We're going to repeat history. This is going to end terrible, just terrible, but I don't want to fear monger. I'm just telling you the facts here. You make your own decision. If you think this is a good idea, well, that's just fine. Okay, so that's your prerogative to think that this is a good decision. Now, it gets even better. It gets even better. Let's say you don't have the 1% down payment. All right, so let's say you don't have that $5,000 saved up on a $500,000 house. Well, here's what Rocket Mortgage will do. They'll give you a credit card to go spend some money. And if you spend enough money, they'll give you 5% of every dollar you spend towards your 1% down. You cannot make this stuff up. I mean, you can't. You really can't. I don't know. I mean, try to make it up. You can't, but they give you a credit card. So every dollar you spend, they give you a nickel. They put that nickel into your 1% down. So you can get into these houses, I'm pretty sure, with close to nothing down. They'll give you a nice high mortgage rate, so you're sure to default. But hey, maybe you don't even make a payment because you got nothing into it. When you don't have skin in the game, you just keep going, right? You just keep going. You don't need to make the payments. You just don't. It's just the way it works. It's what you do, right? It's what happens. Anyways, that's what's going on. And I don't mean to be completely negative. I don't think that's negative, but it is kind of funny, right? I mean, giving loans to people who can't afford them. What a concept, right? What a concept. Smoke and mirrors holding up the real estate market. I'm telling you, it's holding it up. It's what's going on out there. It's not really real. Look at those prices, 0.4% for 1 month that went up. That could be a rounding error. That could be the dollar going down. That could be the smoke and mirrors that they're holding up. 50% giving the buyer a kickback of some sort. They're giving them a new roof. They're giving them an air conditioning unit. They're building the pool in the backyard. They're leaving 20 grand in escrow after close because they don't want the money. There are so much smoke and mirrors going on right now. This is not going to end well. I know I'm going to get those haters out there telling me I'm out there fear-mongering. Oh, that's what I do. I'm just a big fear-monger. If you like this stuff, give me the thumbs up. Why not? Why not? It's Tuesday today. I don't normally do one on Tuesday. I did one yesterday, but the markets are back open now. The markets, they're having that little rally on that artificial intelligence, on that debt ceiling being resolved. I'm a little worried about this market. I don't know if I'd be long it. I have a small short position on. I think we're coming down. As we start to come down, I will be adding to my short position. Just my take. I'm Tall Mike. Get out there, everybody. Have a great day. Bye-bye.